Okay, everyone, welcome. Let's jump straight into the financial picture for June 3rd, 2025. We've gone through today's reports and data, and the goal here is really to pull out the key takeaways and make sense of it all for you.
Exactly. Think of it as, well, getting you quickly up to speed on what moved the markets today and, why it actually matters. We've looked at the numbers, the news, and some important warnings, too.
Great. Let's start with something quite big picture, actually, a long-term trend. Our financial fact of the day from the sources is pretty staggering. Indians now hold over 10 lakh crore in equity mutual funds through SIPs.
That's systematic investment plans, yeah. And it's a huge milestone. What's really striking, the reports point out, is the consistency. We're talking monthly SIP flows staying above 20,000 crore for the last 6 months straight.
6 months above 20,000 crore? That consistency, it really says something, doesn't it? It's not just a peak. It feels like a real shift in behavior.
It does. It suggests, more and more people are taking that disciplined, long-term view. Less about timing the market, more about time in the market.
So what does this scale, this discipline, signify fundamentally?
Well, I think it points towards a maturing investor base, really focusing on systematic wealth creation. This move from maybe more speculative stuff towards patient compounding via SIPs, that's fundamentally healthy for the whole market ecosystem.
Agreed. A really positive underlying shift. But okay, let's bring it down to just today, June 3rd. How did that big picture meet the day-to-day reality of trading? What did the closing numbers at 3:30 p.m. IST show us?
Right. Well, looking at the market summary, it was generally a down day for the main indices. The Nifty 50, the big one, closed at 24,542.50. That's down about 174 points, or 0.70%.
Okay, so a noticeable drop for the large caps. Did the broader market follow?
Largely, yes. The Nifty Midcap 150 also finished lower. It closed at 21,164.75, down around 76 points, which is 0.36%.
And the overall market?
And the Nifty Total Market Index, that reflected the sentiment too. It caused 68 points, or 0.53%, ending at 12,785.25.
So large and mid caps definitely felt the pressure. Any part of the market bucked the trend?
Actually, yes. The Nifty Small Cap 250 Index, it managed a slight gain, closed up 17.50 points, just 0.10%, at 16,971.25. So a bit of resilience there, maybe some selective interest.
Interesting contrast. So long-term SIPs looking strong, but today saw most indices slip. What were the main reasons cited in the sources for this market weakness today?
The reports mainly put it down to a few things. Cautious global cues, a bit more of that risk-off sentiment creeping in.
Meaning investors getting a bit nervous.
Yeah, exactly. Less appetite for risk. And also just straightforward profit booking, people taking some money off the table after recent gains.
Okay. Global factors, caution, profit-taking.
Yeah.
Any specific sectors really dragging things down?
Yes, the sources were quite clear on that. Banking and financial stocks were the main culprits behind the Nifty 50's fall today. Their weight in the index means they often have that kind of outsized impact.
Right. Banks and financials leading the way down. Makes sense. Now, beyond the broad market, was there any specific company or group news that really made waves today?
Oh, definitely. There were significant reports concerning the Adani Group. News broke that U.S. prosecutors are apparently looking into potential violations linked to importing Iranian LPG, specifically mentioning activity through the Mundra port.
Wow, okay. That sounds serious. How did the market react to that news?
Predictably, really. Headlines like that, even about a probe, tend to trigger a pretty broad sell-off across the group's stocks. It just shows how sensitive markets are to regulatory or investigation news, right? Investors tend to react first and ask questions later across associated companies.
Yeah, definite overhang for that group from these reports. But it wasn't all negative on the company front, was it? I think I saw something positive for an infrastructure major.
That's right. Good counterpoint. Larsen & Toubro, L&T, they announced they'd bagged some major orders from the Rajasthan government. The value was reported between others euro and 2,500 crore.
Okay, significant orders. What does that signal for L&T and maybe the wider infra space?
Well, for L&T, it's obviously great for their order book, gives them revenue visibility. And for the sector, it sort of reinforces the feeling that government spending on infrastructure is still quite strong, a positive data point there.
So investigation impacting one group, solid orders boosting another. Any particular stock that really stood out as a performer today, according to the sources?
Yes. Solar Industries India had a very strong showing. Its market cap actually crossed the euro 1.5 trillion mark. The reports mention it's rallied something like 25% in just the last couple of weeks.
Whoa, 25% in 2 weeks is Quite something. What's driving that surge?
The main reasons cited were strong execution on their orders and really robust demand in their key segments, explosives and defense. Seems like they're capitalizing well on those conditions.
Okay, so a real mix at the company level today. Interesting. Let's widen the lens again. What about other key indicators? How did the government bond market behave?
India's 10-year government bond yield, it nudged up a bit today, reached 6.27%. This actually reversed the fall we saw last week.
Any reason for that uptick in yield? What were the sources saying?
Two main things mentioned. One, investors perhaps booking some profits on bonds ahead of the RBI policy meeting that's coming up later this week. And two, just that ongoing sort of background noise of global rate volatility, which always has a bit of a spillover effect.
Right, positioning for the RBI and those global uncertainties. And the rupee. How did it fare against the U.S. dollar?
The rupee was trading around 85.58 per dollar. Reports suggested it weakened slightly from yesterday's close, partly due to continued month-end dollar demand and maybe somewhat cautious FPI flows.
So a bit weaker today.
Yeah, but importantly, the sources also noted it was broadly stable compared to, say, the previous week. So under a little pressure today, but not a major shift in the bigger picture.
Got it. Okay, let's shift gears now to the IPO market. Always generates a lot of buzz. Today was flagged in our source material as the last day to apply for a specific SME IPO, wasn't it?
That's right. The 3B Films Ltd. SME IPO. It closed for subscription today.
Okay. And give us the basics. What kind of company is it, and how is the interest?
Well, it's an SME IPO. So for a smaller company listing on that specific platform, they make things like cast polypropylene and polyethylene films. And yeah, interest seemed high, at least initially. By midday, the retail part was reportedly subscribed about 1.53 times.
1.53x retail subscription by midday. That sounds quite popular.
Yeah.
But the sources seem to really emphasize some pretty serious red flags here. These are important points for potential investors to understand, right?
Absolutely crucial. This is where looking beyond the headline subscription number really matters. The first big flag raised was that the company operates in what's called a commoditized segment.
Commoditized, meaning basically their products aren't very unique, lots of competition.
Exactly. And that usually means very thin profit margins. Adding to that, the sources highlighted a high sensitivity to raw material costs. If those costs go up, those thin margins can get squeezed very easily.
Okay, tough business environment. What else?
A big one, customer concentration. Over 60% of the revenue reportedly comes from just a few clients.
60%. Wow. That's a huge dependency, isn't it? Losing just one major client could really hurt.
It's a significant risk, yeah. Then there was the point about limited differentiation. The sources suggest that they don't really have a clear tech advantage or, a scale advantage over competitors.
So struggling to stand out in that crowded, low-margin space.
Yeah.
Any other flags?
Just the general risks associated with SME IPOs themselves, things like typically lower liquidity after listing, meaning it might be harder to buy or sell shares easily, and that can lead to higher price volatility compared to stocks on the main board.
Right. So you put all that together, high retail interest on one side, but these fundamental weaknesses and risks highlighted by the sources on the other. What was the overall critical take?
Well, the take was pretty stark. It contrasted that initial retail enthusiasm with what the sources saw as weak fundamentals and elevated risks. The clear message, especially for risk-averse investors, was one of caution. It really drives home the point. Don't just chase IPO hype. Look under the hood.
A very important lesson there. Understanding those red flags seems key. Okay, building on that, let's look at the broader market outlook. Based on today's action and what we know is coming up, like the RBI meeting, what's the likely vibe in the near term?
The consensus from the sources seems to be expect continued volatility, choppy conditions, things like the RBI policy decision this week, ongoing global cues, FPI flows, they're all expected to keep the market jumpy.
Okay, so buckle up for some fluctuations. Did the sources offer any sector-specific views?
Yeah, a few points. Banking and financials, which were weak today, might stay under a bit of pressure, maybe due to regulatory things or global factors. On the flip side, some industrials, like L&T, with its strong order news, could potentially outperform.
And anywhere, investors might look for a bit more stability in this choppy sea.
The suggestion was that defensive sectors could offer some relative safety. Think FMCG, fast-moving consumer goods, and maybe certain select small-cap stocks, perhaps those less tied to the big macro swings.
Right. So taking all that analysis, the volatility, the sector views, what's the practical advice for investors trying to navigate this, according to the sources?
The core recommendations were pretty classic, actually, but very relevant now. First, focus on quality stocks. That's a direct contrast to chasing speculative things like maybe that IPO we just discussed if the
Yeah,
fundamentals aren't there.
quality over hype. Makes
Well,
sense.
exactly. And second, maintain diversification. Spreading your investments across different assets and sectors is key to managing risk, especially when the market's expected to be choppy like this.
Quality, avoiding speculation, diversification. Sound advice. Now, before we wrap up, there was one final, really critical beware warning highlighted in the sources, something everyone needs to hear.
Yes, this is incredibly important. The sources detailed the growing problem of social media trading scams.
Okay, tell us more. How are these scams working?
The common method described is fraudsters setting up fake profiles, posing as trading gurus or experts on platforms we all use: WhatsApp, Telegram, YouTube, Facebook, even X. They lure people in with promises.
Promises like,
Things like secret stock tips, ridiculously high guaranteed returns, or offers to manage your trading account for you to make quick profits. It sounds tempting, but
it's a trap.
oh my.
What's the scammer's actual goal?
It's always bad for the investor. Either they try to get you to transfer money directly to them, or they get access to your trading accounts and steal funds, or they use people for pump and dump schemes, hyping up a worthless stock, getting others to buy it, driving the price up so the scammers can sell their shares at a profit, leaving everyone else holding the bag when it crashes.
That's genuinely scary stuff, especially for people new to investing.
Right.
What's the absolute best advice from the sources on how to protect yourself?
The advice is clear and thankfully actionable. First, always verify credentials. If someone claims to be an expert, check if they are registered with SEBI, the market regulator. It's a simple check.
Okay, verify SEBI registration. What else?
Second, be extremely suspicious of any unsolicited offers, especially those promising amazing returns or asking for control of your money or account, particularly if they come via social media or messaging apps. Just ignore them.
Don't engage with unsolicited offers. Got it.
And maybe the most crucial, use only SEBI-registered intermediaries. Stick to well-known regulated brokers and platforms for all your investing activities. Don't go off platform based on some stranger's advice.
Verify. Be wary of unsolicited offers. Use registered players only. Simple steps, but sounds like they could save people a lot of heartache and money. Thanks for laying that out so clearly.
It's vital information. Knowing the risks is just as important as knowing the opportunities.
Absolutely. So we've covered a lot today. That big SIP milestone, the market dip led by financials, the contrasting fortunes of Adani Group and L&T, solar industry's run, bond yields ticking up, the rupee's slight wobble, a deep dive into that risky SME IPO, the choppy market outlook, and this crucial warning about scams.
It really paints a picture of how many different forces are always at play, doesn't it? Long-term trends, daily news, specific company issues, investor sentiment. It's all interconnected.
It is. And as we wrap up our look at June 3rd, 2025, maybe let's leave everyone with a thought that ties much of this together, especially the cautionary notes we heard about the IPO and the scams. It's a quote that was highlighted in the source material. Risk comes from not knowing what you're doing.
That really resonates, doesn't it? Not fully understanding the business behind an IPO, not verifying who's giving you advice online, not grasping why the market is volatile.
Yeah.
The lack of knowledge is the risk.
Exactly. Today's information, from the IPO red flags needing investigation to the scam tactics needing awareness, it all underlines that simple truth. Being informed, doing your homework, understanding the potential downsides. It's not just smart, it's fundamental to navigating the financial world safely. Something to really think about.
A powerful takeaway indeed.
And on that note, we'll conclude our look at the financial sources for today.
Thanks for tuning in, everyone.